Thanks for joining me, Richard. I'm excited to have you.
Yeah, thanks for having me on.
I'm keen to really start with understanding your journey, your background, and what led to the start of One Confirmation.
Yeah, so I got started in crypto around 2015. I was doing research in cryptography, distributed systems back at Stanford, and that's how I first learned about what Bitcoin and Ethereum were. So interesting. I got into crypto more from the tech side rather than kind of the libertarian, Bitcoin, hard money, gold like ideology, which is how a lot of people got into crypto before me. Um, And then fast forward to around 2017, we started 1confirmation as really one of the first venture funds in the space. So kind of all the funds around that time period or before us were hedge funds that were, trading cryptocurrencies, doing like short-term price predictions. But we want to take like a long-term VC approach of, backing founders at the seed stage, sticking with them through like the bear markets for many years, and just kind of being their first partner. Um, yeah, so we started our first fund in 2017. Our biggest winner in that fund is obviously OpenSea, which we led the seed round in early 2018. Um, and we've also had a bunch of other successes like DYDX, MakerDAO, Super Rare, a lot of the blue chip DeFi and NFT projects we know of today. And then fast forward to today, we're on our third fund. We're still only focused on seed, write checks between 1 to 3 million, basically the lead investor in seed rounds, and make very few investments. So like have a pretty small concentrated portfolio. So that way I can spend a lot of time with founders.
That's very interesting. And can you give any clarity on what you were doing before One Confirmation? What led to you wanting to start a venture fund?
Well, I was still at Stanford. I was doing research with Dan Bonet.
Ah, gotcha. Okay. Um, and I guess becoming coming a bit more current, earlier in January, you made a few predictions for underrated product trends for 2024, which were prediction markets, on-chain messaging, and account abstraction. Can you elaborate on why you think these are underrated trends? Personally, I've been hearing a lot about account abstraction, at least over the past year or so. So can you hear what you think?
Yeah, for sure. So I wrote a Substack article 2 weeks ago for my three predictions for 2024, which I've actually been doing this series every year since 2019, and it's always fun going back each year and seeing how my predictions turned out, like for past 5, 6 years. But anyways, for 2024 this year, my three were prediction markets, on-chain messaging, and account abstraction. So I'll go through each of them pretty quickly. So prediction markets, I mean, 2024 is an election year, and election years always have a lot of volume. And as we invest in a project called Polymarket, which is a leading prediction market platform. And it's crazy that I just looked at the data. 8 out of the top 15 days in their volume days in their history came from this year alone. So we're only 16 days into January, and already like 8 of those 16 days were like all-time highs on Polymarket, and
Wow.
are largely due to the Bitcoin ETF approval, which that market drove a lot of volume. You had like the Iowa caucus yesterday. Um, and plus, like I feel like going forward, people are losing trust in mainstream media, and who knows what things are actually true that you see on social media or you see but like in the mainstream press. So like nowadays, I kind of just look at the market odds to see if things like the room temperature superconductor, if that's actually a real thing. There's actually a polymarket market on that. Um, and there are like markets on like the Israel Gaza conflict, seeing like what's one-sided reporting or misinformation. So markets, I think, are increasingly going to be a greater source for the truth. So that's why I'm really excited about prediction markets.
I
Um,
guess just to sorry to butt in, but what would you say is different compared to like the earlier prediction markets?
well, I think the main thing that's changed is like product timing.
Mm.
Is like prediction markets. I mean, we invested in Augur back in 2018. At the time, it was kind of the users of prediction markets at the time were kind of like libertarian cypherpunks who like thought that this was a cool new use of the crypto and like libertarianism. But like, today you have like Trump that's like posting polymarket odds on Truth Social to his like millions of followers. You have like mainstream media that's like quoting, like Politico quoting markets. So there's just more mainstream attention and like awareness of what prediction markets are. So I think the product usage timing is a lot better now. Yeah, so that's prediction markets. I can move on to the other two quickly. So on-chain messaging, I think like one of the biggest pain points I still hear from our portfolio founders is not being able to get in touch and get in contact with their top users. And there's really like no way to message addresses on chain. And there's like early projects like XMTP that are trying to build protocols for this. But like the great thing about addresses, on-chain addresses, is that they're basically like identities. So like what if you can turn that into something like an email inbox where you can send messages to that? And there hasn't been a good product built around this. So this is like one product category that I'm really excited about. And I'd love to see more startups building in the space.
Mm-hmm.
And the last one on account abstraction, which you talked about like being excited about. So, AA has been an idea that's been around since really Ethereum's beginnings. So, Vitalik has been writing about account abstraction since 2015, 2016, but it's always required a hard fork to work. And, early attempts like Argent and Ethereum, we actually invested in Ethereum, tried to do account abstraction, but with gas prices and not a change in Ethereum core protocol, it was just really clunky to do. So fast forward to around ETH Denver last year, that was when 4337 finally went live on mainnet. And this new spec kind of changes the game for account abstraction because like for once it's actually practical to do, like from an implementation perspective. So we invested in the market leader bundler and paymaster project. It's called Pimlico in the account abstraction space. And they're kind of the infrastructure sitting underneath all the different AA wallets. So going forward, I think in 2024 and over the next few years, we're going to see more wallets and apps adopt account abstraction as kind of a core framework for like the user experience. And then Pimlico and like other bundlers and paymasters will be the infra that powers all of that.
Yep. No doubt. I think that's definitely a super exciting time for a lot of the wallets and apps who have been waiting for this for a while. I know you guys have a NFT fund as part of 1confirmation. And I was really keen to understand your current views on NFTs. As a VC, where do you see value? Like is it NFTs themselves? Is it NFT infrastructure? And how do you think about it in the current market?
Well, I think it's both. Both NFTs and infra can accrue value. And the analogy I like to use is Bitcoin and Coinbase back in 2014. So like, back then, there was a big question among VCs is like, should I invest in Bitcoin or should I invest in Bitcoin infra companies, like equity companies? And it turns out that, Bitcoin outperformed everything except for Coinbase, or it was about neck and neck with Coinbase. And I think the same could certainly be true here with NFTs, where should you invest in like the blue chip NFTs, so like punks, high-end art, or infrastructure marketplaces like OpenSea and others. And the jury's still out, but I think there is value, like there is like big upside to investing in like the asset themselves rather than kind of the picks and shovels in the asset class.
Yep. And how did you go about raising an NFT fund? Like, was there a lot of hurdles when it came to LPs?
Well, fortunately, it was a lot of our existing LPs who kind of re-upped for the NFT fund. And it was also back in 2022 when the fundraising environment was certainly different back then.
Sure. Gotcha. Um, more recently, a couple of projects have started a system called the point system where they're awarding points to users for various actions. I'm keen to understand your view on points, and then more similarly, your view on airdrops and the effectiveness of airdrops for projects.
Yeah, so first on points, I think points are interesting for two reasons. So first, you can reward incentives without needing to do a token, and therefore you kind of avoid all of the regulatory question marks around launching a token and like whether or not it's a security. And like then this is also why you see a lot of projects doing points right now, because it's like the cost of doing points is a point system is like free. And you can kind of punt the decision of whether or not you want to do a token down the road. And I feel like a lot of users might be in for a surprise this year when they realize that points don't always matter, and they don't always necessarily convert to tokens. So I think that's the first interesting thing about points. The second is it allows you to do like continuous rewarding of behavior. So like unlike airdrops where it's just a one-time event, so people farm the airdrop until the token generation event, and then they dump the tokens and then like leave and forget the protocol forever. With points is like you reward continual usage and loyalty. So it's kind of like a airline point system where you have to be active recurring user of the product to like accrue points over time. And I guess a third thing about points is because the loyalty system is kept on off chain rather than airdrops, which are kept on chain. At the end of a period, like the team can like retroactively look at the metrics of how well did they incentivize engagement, and then figure out how do the conversion between points to like real dollar value through the token. And like that's like one of the advantages having doing it off chain is like you don't lock yourself into a specific value, like dollar value cost of like incentivizing each type of behavior. And it's just a lot more efficient and smarter way of rewarding usage.
Gotcha. I guess a lot of the argument I've heard for it is that, it's crypto. Why are we using like old technology like points? Exactly how you described it, like airline points. Like this is old tech. Why aren't we just doing straight up tokens? But you've made some good points about why it makes sense as well.
Yeah, it's a double-edged sword. Like when you keep everything on chain, yes, it's transparent, but it becomes extremely easy to game.
Mhm.
And when you know exactly how much it costs, how much you're going to get rewarded in sending a particular transaction or doing a certain behavior with this protocol, then you kind of create a cottage industry of like professional Sybil farmers who will just like spin up a bunch of addresses and do these types of behaviors because they know how much they're gonna earn.
Gotcha. Um, and I guess expanding into airdrops, do you still see that as being a valuable mechanism for token projects?
Well, like token projects, they all have to do when you do a token launch, you have to distribute um, it to the communities for you to be sufficiently decentralized at the beginning. Like so that's kind of the motivation for doing airdrops. Kind of the question is what's the optimal distribution type? How do you eliminate Sybil attackers from your distribution set? These are still like open questions that are being worked on by a bunch of different teams. And there's been interesting airdrop mechanisms over the years. Like actually, one of our portfolio companies called Hop Protocol. They were the first to pay people to report Sybil addresses. So they kind of had a bounty program for finding kind of Sybil attackers for the airdrop, and then those bounty hunters like got percentage of the reward for like their service. So that was kind of a first, and there's been projects like Gnosis Safe and Connects and others that have copied what Hop's done. Yeah, so I think as a whole, like with points and airdrops, it kind of reminds me of like internet marketing back in like the late 90s, where they raised hundreds of millions of dollars in venture capital money, just spent it all on banner ads. But the industry kind of got smarter over the years and like learned how to measure, like quantify customer acquisition costs, customer lifetime value, how to do like cohort analysis and like retention analysis. And I feel like that's where the crypto industry is today, just figuring out how to get smarter
Mm.
among measuring all these growth metrics.
Yep, that's fair. And I think talking about some like crypto specific wording as well. Um, I remember I think late last year you tweeted about intents and how they're basically limit orders. I'm
Yeah,
keen
yes, I
to
remember
hear
that
your
went
thinking
viral.
on it. Yeah.
Yeah, yeah. I mean, it's kind of funny how like crypto sometimes like goes down the rabbit hole and just like reinvents things that were like solved like decades ago. So yeah, it's fun. Like I think that was like intents are limit orders. Um, I forgot what were market makers. Solvers are market makers. Is a kind of, yeah, fancy new words for ideas that like already exist.
Yeah. And do you still so you still maintain that opinion on intents as they're gaining a bit more hype?
Well, it's I'm not here to say that like intents are like bad or anything. It's just that yeah, just like kind of computer scientists and technologists and researchers love to like create new fancy words whenever they come up with a clever breakthrough. But in reality, it's kind of a rehash of like ideas that have like already existed in TradFi for like a long time. But
Yeah.
I say like overall as like DeFi matures, we're the industry's like slowly moving away from like passive liquidity, so like AMMs, which were great back in 2019
Mm.
when you didn't have any market makers and you needed to have like passive liquidity on chain, to like now 2024 when there's billions of dollars of volume in DeFi every month. Um, we're slowly moving away from passive AMMs to something more resembling order books. And because of that, that's why we have like RFQ like system
Mm.
with intense limit orders, whatever you call it, just ways for users to get their transaction done.
Yep, yep. No, that's fair. And shifting a little bit from core crypto stuff to fundraising, I'm keen to understand, what are some of the toughest questions you faced raising from LPs for the crypto fund or, even the NFT fund?
Yeah, I actually tweeted this I think a month ago. It's like four most commonly asked questions from LPs.
Hmm.
And the four are first, where's my DPI? So for those who aren't familiar with that term, that stands for distributions to paid-in capital.
Hmm.
So basically what we're seeing right now with a lot of funds is they have a lot of, I guess, good paper gains, but they sold very little of their holdings and distributed the money back to LPs. And the problem with that is like, when the market crashes, that kind of wipes out all of their paper gains. Plus LPs are always kind of suspicious about like how you're, marking certain investments when they're very illiquid, and stuff like that. So
Hmm.
kind of the consensus among LPs right now is unless you have good distributions, we're not going to give you more money until we get our money back.
Mm.
And kind of without naming names, like there aren't very many funds in the space that have good DPI. So DPIs across the board are pretty low, and that's kind of the first concern of LPs. I guess the other three things I get asked are like kind of second is like kind of broader macro with like interest rates, and which is like rising interest rates has like not just affected crypto, but like the tech VC in general, because what's called the denominator effect is suddenly like public markets are down a lot, uh, uh, for like institutional LPs that invest in both public and private. Their private investments are now disproportionately a greater slice of the pie. So rather than making more investments to like private illiquid investments like venture capital, they actually want to downsize. And that's why there's just been the institutional LP appetite for venture capitals like dried up significantly in the past year. So like that's kind of more macro. I also get asked a lot about like, FTX, CZ, indictment. It's kind of just like LPs reacting to like big headlines. And I mean, the truth is like we had a lot of main characters in the last cycle that like got really big, and like blew up. And we're still in the phase of like, washing all those bad actors out. But kind of underneath all of that like facade, there's actual like builders and good entrepreneurs building in this space. So you can't always like look at the big headlines. And then obviously the last question, which I probably get asked the most, is like, what are like use cases of crypto outside of speculation? And I mean, I'm actually writing a Substack article on this right now, but I think what we've seen in the last year is there's starting to be a bifurcation in the crypto space where there's some builders who have gone like really nihilist and argue that like crypto is only for speculation and we're just going to build new casinos, like finding new ways to speculate. And then you have others who still believe in the ideals of like Satoshi, that like having an open computer enables a bunch of new use cases. Like, prediction markets is one, ZK tech is another. There's a lot of new use cases enabled by crypto and kind of focus on like the long term, even though, short term it might not be sexy, or you might not have these like big price pumps or whatever. So yeah, those are some of my thoughts.
No, that's great. Appreciate that. I've definitely heard a few of those as well, while going through fundraising. What would be one piece of advice that you give to an emerging crypto fund manager?
I guess like having a differentiated view. Is like too often I see people just kind of regurgitate like what's the hot narrative on crypto Twitter. And turns out like investing in consensus, if you always invest in consensus, you're almost certainly going to underperform the market. And kind of if you look back at like historical data, like which VC funds have outperformed, they're always like the extreme outliers, the ones that like took a bold contrarian thesis, kind of went all in on it. And when that turns out to be right, you win massively. So like, for us, that was like being bullish about NFTs, back in 2018 when it was unsexy and like OpenSea was doing like less than 1 million in monthly volume. Yeah, like Multicoin that went all in on Solana. And like that was an asymmetrical bet that paid off very well. So, and like I guess people keep forgetting this, but like VC is an extreme power law outcome industry, which means that the vast majority of investments and likewise funds are going to underperform the market. So you're really looking for like the top 10% of funds or investments that outperform. And like those are responsible for like almost all of the returns in the industry. And like, so, and, if you're not in like the top 10%, you're kind of undifferentiated. And like the way you hit those outliers is just to, make a bunch of bold contrarian bets. And, you could be wrong most of the time, but you only need one to work very well for like everything else to not matter. And like, that's kind of what the game is when you're in a power law industry.
Yep, that's fair. And you've been in crypto VC for a while now. On your third fund, you said, is there any companies that you'd put in your anti-portfolio that you want to talk about that you've learned from?
Oh, yeah, I have a ton. Like my anti-portfolio might be worse than my portfolio. Yeah, I mean, like, yeah, one that comes to mind is Celestia. I passed when it was at 60 million valuation, and then now it's like today I think it's like 14 billion.
Yeah.
So it's definitely an anti-portfolio. Kind of what I've learned from infrastructure investing is I know it's really tricky for me sometimes because, I have a deep technical computer science background. So I really like to get in the weeds of like architecture, kind of getting very nuanced, like having a good thesis about like what's the best architecture design, like what are the right technical trade-offs. But really at the end of the day, like these things can change so much. Like Celestia actually back then it used to be called Lazy Ledger. And the companies kind of pivoted their design many times since I first took the pitch meeting. And at the end of the day, the things that matter the most are like one, the quality of the team and the founders. And then second is, are they kind of pushing the space forward? Are they building in a new space that doesn't have a lot of competitors, that's doing something unique? And looking back at Celestia, like having a separate chain for data availability was really first of its kind. Back in early 2021, there weren't really any other projects for data availability, like other than like Ethereum. So it was a first of its kind project, and like that's what made it really unique. And I think like being in a new first of a kind space plus the quality of founders, I think are the two most important things when looking at infrastructure investments, rather than like getting very deep and technical about how they're designing their architecture.
Right. Right. No, that's a good point. What's a secret obsession of yours that not many people know about?
Well, I think a lot of people know about this now, but I'm very obsessed about tennis.
Right.
And it's only a sport that I picked up in the past, I think 3.5 years ago as like a pandemic sport. But I play almost every day. I'm also like a tennis maxi, so I shit on pickleball all the time. Um, I go to a lot of I go to the U.S. Open every year, like a bunch of other live matches. So and like I've made a lot of friends in crypto over the years through tennis. It's like going to a new city and traveling with my racket, just tweeting, "Hey, I'm looking for hitting partners," and like that's how I meet new people.
Yeah, okay, that makes sense. I think when I first met you as well, you were with your tennis racket.
Oh, yeah, that's funny. I think this was Stanford, right?
Yeah,
Yeah, yeah. I think I had a hitting session like right before. So yeah,
right.
I did have my racket then.
And finally, what's the latest publicly announced investment you've made and why did you make it?
Yeah, so we just invested in titles end of last year,
Mm,
titles to XYZ. So this is actually the first like AI and crypto like crossover use case that actually makes a lot of sense to me. So what titles is doing is they're allowing generative artists to train on their artwork using like stable diffusion, like these AI models, and collectors can mint NFTs of the output of like the AI generated artwork. And like what's really cool about this is, in the traditional um, kind of media space, there's a big legal battle right now going on with AI generated content of like whether or not this infringes on copyright law. And what's cool about titles is like it cuts right through all of that, where now the original creator can get royalties and attribution for their work.
mm,
And you can use AI tools to like monetize on that. So it's like the best of both worlds. And like what Titles is doing is they're providing the tooling for all of this. So it's good for the artists and it's good for kind of user generated content as it's now legally permissible to use AI tools without worrying about like IP issues.
mm. That's a really interesting one. But thanks for coming on, Richard. I had a great time chatting. I think we went through quite a few different things.
Yeah, yeah, for sure. Had a good time chatting.
Cool. Appreciate your time. Thanks so much.